Welcome to the deep dive. It's something we hear quite a bit, people kind of blurring the lines between investing and gambling.
Yeah, absolutely. Like someone saying, oh, I'm just gambling on the stock market.
Exactly. But looking at the sources we've gathered, they really draw a very sharp line, a big difference.
A fundamental difference, really.
So today, we're going to get into that, why investing really isn't gambling, and maybe more importantly, why knowing that difference helps you make smarter choices with your money.
Right. It's about empowerment through understanding.
Our mission today is pretty clear. Unpack what really defines each one, using the insights from, all the materials you've helped us pull together. Let's get into it.
Okay. So what's really key here, I think, is that, yes, both involve putting capital at risk. That's the surface similarity.
There's risk involved.
But the why and the how are totally different. Our sources consistently point out that investing is about putting money into things like stocks or bonds, maybe real estate, assets, exactly, with a clear goal, building wealth over time. It's linked to actual value creation.
Right. And it's not just, tossing money out there and hoping. The sources really stress that it's disciplined, it involves research.
Patience,
yeah. And thinking long term, it's calculated. You're looking at the actual value of something and maybe the bigger economic picture.
Precisely. If you dig a bit deeper, investing means understanding things like company financials, balance sheets, market position.
Economic stuff like inflation, interest rates.
All that. You're trying to assess an asset's ability to actually produce something, generate income, grow in value, like rent from a property or a company reinvesting profits to grow bigger.
So it's strategic. And in increasing your assets over, a good chunk of time, it's about being informed, playing the long game.
That's investing in a nutshell. Informed, long-term wealth building.
Okay, so if that's investing, how does gambling compare? The sources seem pretty blunt about this.
They are. Gambling is defined as risking money primarily on chance, on luck,
with outcomes that are highly uncertain, and often, statistically speaking, likely to be negative over time.
That's the crux of it. You're not assessing any underlying value. It's almost entirely down to fortune.
So how does that play out in terms of, say, risk and outcomes? That difference must be huge.
It is. Investing uses analysis, planning, tools to manage risk, potentially mitigate it. Gambling relies on, random events.
Like a coin flip or a roll of the dice.
Exactly. Past results don't influence future ones. Think about a casino. The house always has a built-in advantage. The odds are structured against the player in the long run.
There's no productive asset behind the bet, no company growing or property generating rent.
None at all. It's just a wager on an unpredictable event where the odds aren't usually in your favor to begin with.
Okay, so this is interesting. It really seems to boil down to foresight versus fortune, doesn't it?
That's a good way to put it.
One is about strategy, long-term vision, trying to capture growth and value. The other is kind of a high-stakes moment driven purely by luck.
And that difference even shows up in how they're regulated, right? Investing is treated as a capital market activity. Think disclosures, investor protections.
Whereas gambling falls under different rules, often stricter ones focused on things like addiction, fraud prevention, not really wealth creation.
Another key point our sources bring up, diversification. In investing, you can spread your risk. Different assets, different sectors.
Right, you don't put all your eggs in one basket.
But with gambling, it's often an all-or-nothing bet on a single event. Very binary.
Or maybe the mindset, too. Investing encourages patience, discipline. Gambling might tap into more impulsive feelings, the thrill of a quick outcome.
It often does, that immediate gratification versus the slower, steadier build of investing.
So pulling this all together for you, our listener, understanding these core differences is really powerful.
Absolutely. It lets you choose wisely for your own financial path. It's about making informed decisions.
It's not just about trying to avoid losing money, but about actively building something sustainable, something with purpose.
And it underlines a broader point, I think. The more you research, the more you apply that long-term view, the more you can turn almost any risk into a more calculated step.
That's a great final thought. It's not just about finance, is it? That mindset, research, patience, long-term perspective that can apply to so many big choices in life. How shifting from pure chance to calculated risk changes everything. Something to think about.